Hey traders, Raghee here, and in this video we're going to take a look at the 30-year bond market, and we're going to talk about this high-low gear concept that I use to understand when I want to be a momentum trader looking for breakouts with volume confirmation, and when I want to be a retracement or correction trader where I'm waiting for a pullback and I'm going to buy into that pullback within the context of a trend. And I'm using a market that's not really a clear setup, so we can be a little bit more nuanced about this. However, the easier decision is going to be for the pullback. So the chart on the right is the momentum layout. This is the 10x candle and the volume strength indicator. And this is telling me that I'm really going to want to be waiting for some sort of pullback, because this is not necessarily an ideal environment for momentum breakouts with volume confirmation. Now, I always want volume confirmation, so this is more about pass on the Momo. All right, so no problem. Let's jump into the chart on the left, which is our grab candle indicator set. The grab candle indicator set, which includes the grab candles themselves, of course, the 34 EMA wave, the propulsion dots, and the Darvis 2.0. By the way, this is a free indicator set. The 10X is premium, and it's amazing. And this is the tops. It's also amazing, and it's free. It's one of those great foundational indicator sets that you can grow with. I've been using these in some form or fashion for 2/3 of my career, if not longer than that. So it's not free because it's basic and something you will outgrow. It's free because it's just that important to me that you guys have some great foundational understandings of trends at the root of your trading, as is what roots my understanding of trading, the trends. Charles Dow. All right, anyways, that might be a good video for another time. This is not quite a trend that I love yet, but it's getting so close. And take a look. This is a yellow wave, but I'm starting to see the 21 EMA prop dots light up. So I think it's just a matter of time before this market really confirms sort of the textbook trending environment that I like. Now, in a more aggressive read on a trend, this did confirm a trend. I need about 8 to 10 candles of green grab candles to even begin a very early confirmation of a trend. So this is a very early look at a trend, and I think that green wave is just around the bend. So I'm going to be a little preemptive with this. So here's the setup. And you can do this with the TLT ETF with call options on the pullback. You can do this with the futures contracts with options on a pullback. So a lot of different things you can do. And this too is going to have volume confirmation, but a little different. So let me show you here. All right, let's move this chart. Now I have the July point of control right here. It's a little bit higher than I want to draw it, right there. And I have my 21 EMA right there. Okay, so again, I've got my July point of control at the white line, you can see right there, and I've got my 21 exponential moving average prop dots just below that. Okay, the cool thing about this setup is both those levels, which are very important to me, measure two different things. One's measuring the 8 exponential moving average crossing up through the 21. There's a reason after decades people still use moving average crossovers. They're a very powerful way to understand sentiment and momentum. And if that momentum continues, you end up with a trend. And that's a 21 exponential moving average pullback and a point of control. The most volume that has occurred in the month of July in the 30-year bond contract is at that white line. A pullback to that level would trigger an opportunity to, of course, get long the underlying futures. But it would also be a trigger for being able to use the bearish momentum and to support a correction, right? To buy TLT or 30-year futures call options. So one thing that we have a lot of questions about, our members ask, and I'm sure you do too, trading overnight futures can be pretty cost prohibitive, right? There's a little bit more risk involved in terms of the initial outlay of capital that you're going to have and the uncertainty of what happens while you sleep. I won't say the uncertainty of while the market is closed, because unlike stocks and ETFs, a lot of these futures contracts we talk about are darn nearly 24-hour, 5.5 day a week markets. So the idea that the markets are closed like stocks and ETFs isn't nearly the case in most of these futures contracts that we talk about. So the risk comes when you're just not awake, when you're not able to actively manage the trade. Of course, you could put in a stop loss. You could use a protective put, whatever. There's ways to offset the uncertainty of risk. But for a lot of folks, the conversation ends at the initial capital requirement, $5,100. Maintenance margin is 47. That means if the 5170 falls to an unrealized loss, drops your account to less than 4,700, or if the amount of money you have cannot bring that drop to 4,700 back up to 5,170, or you can't handle a drop to 4,699, for example, right? Then you're going to end up with a dreaded margin call, which also means you're probably trading with too much size if that's all it takes to trigger a margin call, right? However, you need that capital in your account. And for a lot of folks, they're like, Rog, that's pretty much most, if not maybe half of my account for some folks, right? So the way in which we make this affordable and the way that we also simultaneously reduce the uncertainty of, oh, what could happen while I sleep, is we grab TLT calls or the calls in the 30-year treasury. The options, when you get long calls or even use a vertical spread, the options on the future or the options on the ETF alternative to this futures contract allow you to quantify your risk, use considerably less capital oftentimes, not always, but oftentimes, but you know exactly what your risk is. So a lot of my traders who like a 30-year futures overnight position will use a TLT call instead. So think about that next time you're wondering whether or not futures are for you, how to make some of these positions more comfortable, affordable, more within your risk parameter, okay? That's my setup on the 30-year futures, but I also want you to see some of the alternatives that I teach our members. All right, hope that helps. Have a terrific weekend. I'll see you in the next update.